Today on our Friday Fall series, we always welcome chatting with Kelly Price from Wintrust Mortgage. Kelly, how can we help buyers secure property this winter and avoid multiple offer situations this spring?
Hey, Don. I know that you're a big fan of renovations and new construction, as am I. And I think that that's often something overlooked to a degree by spring market buyers. I think that if someone has the vision to imagine an existing property prior to its improvements, prior to its renovations, it's a much smaller segment of available inventory. But I know you know a lot of renovators. If you can help someone find a property that's in the early stages of being renovated, they can, in essence, go under contract before renovations are complete, be a part of those decisions and improvements made to that property. So not entirely, but somewhat customized. And the biggest control factor, too, as far as budget is concerned, considering that we're still in a pretty volatile interest rate market, they can do a long-term rate lock. They can do an extended rate lock program that would allow them to make a deposit, lock in a rate from anywhere from 120 days up to 360. So potentially up to an entire year, they could do a rate lock while they waited for those improvements to be done and were a part of that process. So it might not get someone under roof in spring market, but it can help them lock in a property because I know there's still a large group of buyers out there that lost a multitude of properties and multiple bid offers over the last couple of years.
Kelly, do you have an example of a long-term rate lock for a buyer?
Don, you know I do. So here's one example. If someone were to need 6 months on their contract to buy for the renovations to be completed, they could do a 6-month rate lock. There's a deposit of 1% of their loan amount, not their purchase price, 1% of the amount that they're going to finance. They lock in a rate for that 6-month period. At closing, they would be refunded 75% of that deposit. And initially, when they lock in a long-term rate lock, they are not locking in a market rate, but for a 6-month rate lock, they would be locking in a rate that would be 0.25 or 1/4% higher than market rate. So if market rate is 6% on a 30-year fix, they would lock in 6.25%. And then one of my favorite features of the long-term rate lock programs, Don, is that there's a float down. So if they're locked in for 6 months, when they're 30 days out from closing, within that window of time, if the market has improved and 30-year fixed debt is now 5.5 or 4.5, they can float down at no cost, still get 75% of their deposit back, but they're going to close with that better and improved market rate. The opposite is true, is if interest rates are higher at that time when it comes time to close, in essence, that person is still getting their deposit back, but they've beat the market, which is the true reason why someone would hedge and do a long-term rate lock to protect themselves from having a property they've signed up to purchase become way more expensive while they were waiting for the improvements to be made. So it's truly, I like to call it an insurance policy for interest rates and a way to control what that monthly payment's going to be while you wait for the house to be ready.
Hey, Kelly, it sounds like there's more costs associated with this program. Can I ask the seller to help offset these costs in the form of a seller credit?
Actually, you can. Just like you would on a regular transaction, you would negotiate a closing cost credit, typically up to about 3% of the price. You can negotiate a dollar amount that could help a buyer offset that 1% deposit for the rate lock. You could also use some of that seller credit to permanently buy down the rate further to offset that rate add-on for the adjustment of period of time that they need to lock in for. So absolutely, just like any regular resale deal or new construction, if seller credits are negotiated, they can be applied to help offset buyer costs, maybe in just a little bit different of a way with the long-term rate locks. So great idea, Don.
Thank you, Kelly, for the wealth of information. This is a great product for someone that has a vision, wants to control their budget, and wants to avoid a multiple offer situation on a standard resale property.